GM everyone, and welcome to Smart Contact, an interview series with the world's most important, influential, and impactful Web3 leaders. This podcast is produced by Web3 Harbour and is supported by Circle, our 2024 Smart Contact lead sponsor. Like and subscribe for more Smart Contacts.
So thank you very much, everybody, and welcome to Cross Harbour Thursday, hosted by Web3 Harbour. I'm here today with Sergey Nazarov, co-founder of Chainlink, and we're going to be talking about connecting global capital markets on-chain. First of all, I just want to say thank you to our sponsor for the series, Circle, and as well as our host for today, Finiverse, who provide the venue for the session. And I'm Peter Brewin. I'm the Web3 leader at PwC Hong Kong, and also a board member of Web3 Harbour. So very pleased to have everyone here today. And Sergey, thank you so much for taking the time out of your very busy schedule to come and visit us in Hong Kong and to be part of this conversation.
Yeah, my pleasure. I'm a big fan of Hong Kong. Still a bit jet lagged between everything going on because I work with people in many time zones. So excuse me if I start speaking different languages or something. But I'm really thrilled to be here. Thank you for having me.
Great. No, thank you, Sergey. So, for today, what we wanted to do was spend a bit of time talking about, let's say, connecting capital markets and what Chainlink is doing around that. Mm-hmm. And so I start that, but I also want to talk about your perspectives on Hong Kong. We're a Hong Kong industry association. We're here to basically build the community in Hong Kong and really want to get your perspectives on our city and where you see things going. So but if we could start off for the audience, for those that don't know who Chainlink are, maybe talk a little bit about Chainlink and what you're doing in the space and how you do connect capital markets on-chain.
Sure. So Chainlink really started as a data transmission mechanism, so a data layer between smart contracts and all external data. That's the first thing that something called Oracle networks or decentralized Oracle networks were used for, which is something we invented. Basically, blockchains generate consensus about transactions that they package into blocks. They have multiple nodes that come to consensus, and this consensus guarantees those transactions in those blocks with a higher level of reliability and usefulness than traditional transactions. Decentralized Oracle networks don't generate blocks. They come to consensus about everything and anything outside of a blockchain, right? So it's the same idea of consensus, but it's not used to generate blocks. It's used to verify things. And that verification is quite important because when you put value into a smart contract, you're ceding a lot of control. You're basically engaging in a kind of hyper automation, and that ceding of control has benefits, the efficiency benefits, the kind of transparency benefits, a whole bunch of benefits, right? The control benefits through private keys. But as you see that control to the contract, that works really only if you have a contract that isn't dependent on anything else. And there's only really one or two types of contracts like that, like a tokenization contract that doesn't connect to any external system, doesn't really need to depend on anything else. It generates its own ledger and that's it. That's all it does. But DeFi, real world assets, smart contract insurance, lots of GameFi, all need to use external systems. And then once you connect a smart contract to an external system, you've actually ceded control to the contract, but then you've given control of the contract to the external system, which is not so good if you don't have a way to manage that relationship with the external system. More importantly, smart contracts can't actually connect to any external system. So that's kind of the initial body of work that Chainlink came out of, initially providing the vast majority of price data to DeFi, processing, enabling over $10.5 trillion worth of transactions, primarily in DeFi, by delivering large amounts of data to the top DeFi protocols. Even today, we power well over 50% of all of DeFi, depending on the specific protocol, and sometimes it's even much higher than 50%, depending on the type of protocol. Like, is it lending protocol, derivatives protocol? What kind is it? Then this decentralized Oracle network thing actually ends up doing much more, basically. So the first thing we did with it was verify price data, but then it turns out it can verify a lot of other stuff. So it can verify proof of reserves, which Chainlink is the largest provider of. It can put NAV data, NAV data into fund automation contracts. It can provide identity data to contracts. Basically, any and all data it can and does provide to smart contracts. Then we realized there's other problems that blockchains don't solve. They need to do computation that they can't do. Random number generation is a good example. Certain computations around automation, such as kicking contracts. So smart contracts, despite being called smart, don't know the time. They don't know, is it 9 a.m. or 5 p.m.? They don't know these things. They only know what block they're on. So then there's all those features. And most recently, last year, we released CCIP, which is our cross-chain system. And it turns out that all of these things, the data side, the computational side of Chainlink, and the cross-chain connectivity side of Chainlink, is about 80% reapplicable to smart contracts in bank chains. The bank chains have an additional 20% of requirements that basically boil down to compliance. So 80% of what DeFi does technically is what bank chain contracts do technically, and bank chain contracts have an additional 20% of requirements, often around identity, basically compliance type of requirements. So now Chainlink has expanded beyond powering the majority of DeFi to powering lots of use cases in capital markets bank chains, the majority of which are private. There it basically does the same thing. It powers it with data, and now it powers it also with connectivity. And connectivity in the bank chains is actually quite important because there's going to be more and more chains across all the banks, and all of their purchasing power and liquidity will be locked in those chains. So every bank will have a chain, and actually multiple chains, and the assets and the purchasing power of that bank's user base and that bank's assets will be in that chain. And then all the chains are separate from each other. They don't interact with each other. They have no way to communicate or move value. So that's basically where Chainlink has landed now. It's a data layer and value transfer layer so that all data can go into blockchains, out of blockchains, and value and data can move between blockchains. So that's the three big categories of problems that Chainlink successfully solves, has been solving it at the greatest scale with the largest security, with the best security track record. The point that we have an impact on the industry, I think that's really driven by our impact on DeFi, which continues. But the next impact on the industry for us is both the next version of DeFi, a kind of set of DeFi 2.0 advanced protocols, and capital markets bank chains operating initially independently on the same set of standards, and then eventually interoperating with each other on that same single set of standards, data standards and connectivity standards, which they fundamentally need in order to transact. And so I believe the DeFi people, DeFi 2.0 people, DeFi 3.0 people, all of that will eventually interoperate with the banking chains and the banking sector to form what we call the Internet of Contracts. And that Internet of Contracts needs a standardized way to transmit data and transmit value across all those chains. So that's the sense in which we make something like TCP/IP, but for the blockchain industry, in that we connect all of these systems with each other and to data sources that they need to operate, which is quite important for them reaching their full potential.
Sorry to interrupt the video, but I want to tell you about our 2024 Smart Contact lead sponsor, Circle.
What is Circle?
At Circle, we're building a digital dollar that brings the power of the internet to money.
Circle's the place where crypto meets stability,
where local businesses meet global customers.
and the US dollar meets USDC.
Meet Circle.
Thank you to all of our sponsors and community partners. Now back to the conversation.
How big do you see the opportunity for kind of those financial institutions to actually take use of this? Because I think there are, I see it in the market. We speak to a lot of the financial institutions. They're interested, but they're not jumping yet. And I think part of the kind of they're jumping, they're dipping their toe, right? But they're not changing systems full heart. So how big do you see this opportunity as being, and how do we best tell that story to convince them that it's a big opportunity?
So I believe that all value in digital relationships will eventually be cryptographically guaranteed. So all value in digital transactions right now, the vast majority of it, is not really guaranteed in any meaningful way. You have a password to a bank account, but your relationship with that bank is really, really bad. They can do whatever they want. Your password doesn't do anything. Do whatever they want at any point, and they'd be fine. And you won't.
Just like a social media account.
Yeah, sure. So social media account is the same thing. So I think the first foundational idea is the difference between a probabilistic world and a deterministic world. So in a probabilistic world, you have brands and institutions and entities that assure you and all of us that everything will work fine. But technically speaking, there is no reason why it has to work fine. That guarantee really isn't backed by very much, other than I have a nice logo and there's a nice brand and I've been doing it for 100 years and you should just trust me with all your money or all your data or whatever the hell I want you to trust me with. And you don't really have a choice because that's how everything else works. So just trust me, give me all your data and your money. And, I hope it works out for you. You don't have any choice. So that's the probabilistic world, right? Where at any moment, people can do things with your data, do things with your money that you might not approve of. You have this big terms of service thing that lets them do that. That's your relationship with all of these systems, basically. Then what happens is basically you arrive at a crisis of faith where that doesn't work anymore. So let's take, for example, text messaging. So 10, 15 years ago, everyone would send text messages to each other and they would be completely fine not having them encrypted, right? You would SMS people, all kinds of wacky stuff, all kinds of stuff that you probably shouldn't be messaging, but you message it. And it doesn't matter. You don't give it a second thought, right? Then what happens? Telecommunications companies get hacked. Social media companies misuse personal data. All of a sudden, everyone's pretty upset. And there's what I would call a crisis of faith, right? So people are like, I would like to send text messages about cookie recipes and things I shouldn't be doing. But, I don't trust you anymore. I don't trust you, telecom company. I don't trust you, social media company. So what happens next? Well, what happens next is pretty simple. When you open up your WhatsApp or a lot of these messaging apps, now what you find there is these messages are end-to-end encrypted. This means that not even we can read your messages, right? Like that's an explanation, explicit explanation right there in the thing. So why does that exist? And that's what restored faith, right? So the reason that exists is people now have a cryptographic guarantee that people cannot manipulate this pretty low value information, right? It's relatively low value information, relatively low value communications most of the time. But now everybody wants end-to-end encrypted messages, right? That's what people are cognizant of. Huge user base cares about that. It's a key feature, that type of thing. So that's kind of the first thing that is going to happen with everything. And so the reality is that over different time periods and different asset classes, everything will be converted into what I would call a reliable form of digital, right? So you had maybe 50 years ago in the 70s, you had a transmission from paper to digital. And now you're in the process of a transition from digital to reliable digital. And reliable digital is the alternative model that is deterministic. And deterministic means that you have a private key and nothing can change that. Mathematics guarantees that your private key has a relationship with an asset that has nothing to do with any other person. Every other person on the planet could decide something. It has nothing to do with how mathematics works. And you could just control that thing, right? That's a deterministic relationship. So once you explain this difference to people, and you kind of ask, if I could give you the same features, the same speed, the same cost, basically the same application, but I can give you a deterministic application that guarantees you outcomes, in addition to all those features and cost. Every rational agent will just say, yes, I would love the deterministic one. The thing that is kind of in question is where will that happen sooner versus later? Will that happen with tokenized real estate or tokenized carbon credits or tokenized cash or central bank currency or whatever? But at the end of the day, the reason that all these people will care more and more is that all of this that we're building here in this industry is a fundamentally better format for value and for how to manage digital relationships. It's just a better format. It gives you this deterministic property. It allows you to gain information about the thing that you're dealing with. It allows everyone else that wants to take the thing from you or send you money for it to read from it and understand what the status of it is. People can't fleece you. It has all these huge benefits. And so the reason the banks are getting into this stuff more and more, frankly, is because the crypto industry has grown and they have had to get custody solutions. And, this is what we said. You can find plenty of podcasts where we said 2 years ago, it's exactly what's going to happen. It's exactly what happened. The next thing that's going to happen is also exactly what we said was going to happen, which is they're going to ask themselves, why am I custodying other people's financial products when I'm a bank that knows how to make financial products. Like my business is making financial products and selling them to the world, but somehow my clients constantly want to buy this Bitcoin thing. Like that's what they want. They want the Bitcoin thing. Maybe I, as this big thing, this big bank that's good at making financial products, can make some kind of better financial product out of all this. And it's a very logical thought. And basically 2 to 3 years ago, depending on the bank, they invested in digital asset team. Now it's been 2 or 3 or 1 year, depending on the bank. And the digital asset team has to show traction. They have to show progress. They have to show something. They have to show transactions. And so now they're going to do that. They're going to go into production. They're going to do some transactions. And the level of market demand for those transactions, for those real world assets from those banks, will determine what happens next. My view is that all of those things will be highly oversubscribed because that's been the pattern for them so far. And then relatively quickly, we should go to a robust set of secondary markets. And that robust set of secondary markets will create a very strong economic incentive for all these banks and everyone else who does tokenization to generate more inventory. And that inventory will then be successful, which will just lead to like liquidity begets liquidity and like more inventory. And then it's like, well, obviously tokenizing the thing is better because guess what? I can sell it for 5% more. So that's where I think it's going to go.
Well, I think we're definitely seeing it now because regulation has been the thing holding back the banks because they haven't been able to do this yet. But certainly in Hong Kong and many other markets now, that really is starting to ease and it's starting to enable them to do that. But I think really interesting what you said, and I think it links into a lot of the things that you're doing. Is that I think a lot of the products and the assets that are being created at the moment by the banks, those financial products, are very skeuomorphic, right? They kind of just look like tokenized forms of things that banks are already familiar with, and tokenized shares, tokenized bonds. I think a lot of things you speak about, Sergey, are kind of around saying, well, how do we make these things like more interesting, better? How do we take the technology in its natural form and create new things? So what's your take on that? Where do you see kind of these tokens go into the future? And what are the sort of the innovations you expect to see kind of as that next phase?
Sure. So the regulation here is much better. The regulators here do a good job. They're very proactive. They're very positive. They're trying to help people. Very positive on that. One of the reasons I'm also here. Very thoughtful people trying to move our industry forward. So very, very positive on that in many ways. So here's basically what's happening. So in the traditional system, value transfer and data about the value live in two totally separate worlds, right? So I give you an ownership receipt. That ownership receipt has no relationship with any other meaningful data. You have this ownership receipt. It's now your problem to figure out what the hell is going on with the underlying thing the ownership receipt represents. You need to figure out, are the mortgages well backed? Is the carbon credit real or fraudulent? Does the tokenized real estate have new debt I don't know about? All of this is your problem. This is like, you have to go figure that out. You have to get all that data, sort it out, figure out what's going on with the asset. That's the current system. The value transfer system, data transfer system, completely and totally separate. This kind of blockchain, smart contract, Oracle thing is basically merging, tightly coupling data and value into one thing. And I'll explain how that looks. So the tokenized real-world asset for carbon credits, for example, is an ownership receipt. So the token represents an ownership receipt. As you transfer that ownership receipt, you transfer ownership. Great job. Not like super much has changed. Well, a lot of things actually changed, but more can change. In addition to being an ownership receipt, that smart contract is also a data container. So it is a place where you can write data, and in the process of writing data into that data container, you can inform everybody interested in that ownership right about what is going on with it, right? So now I have an ownership right, and I have a data container, right? Like it's the same thing. And in that data container, it says something like, the real estate does not have new debt. I just checked it a second ago. And that's what our system does. Our system verifies that the real estate doesn't have any new debt. Or the gold is in the gold vault, and therefore this gold coin has an underlying real asset. also known as real world asset, right? It's like a reason this is called this. Likewise with carbon credits. The carbon credit is redeemable and valid and hasn't been modified or fraudulently used, right? So what are you basically doing? You're creating what we call a unified golden record, where the ownership receipt has evolved to have various critical pieces of data that guarantee certain things about the underlying asset. And what does this simple change of the tight coupling of data and value do? It changes the model with how people interact with this asset. So I could know nothing about carbon credits. I could have no idea where to get data about carbon credit validity, or whether the carbon credit is double spent or what, or about real estate, or about whatever. But if I have this ownership right with this data container, if I have this unified golden record, all I have to do is read from it. I don't have to be an investment banker. I don't have to be a hedge fund manager. I don't have to know anything about real estate. The thing is figuring it out for me, what the key aspects of the underlying asset are and how they work, and whether they're solid or not. And so now everyone doesn't have to run around and figure it out. Everyone can just read from the ownership receipt what is going on, which is a very, very big shift. It's a very fundamental change in how the traditional world works versus this world. That's the first thing going on. That's a meaningful change for risk management, for a whole bunch of things. I can give you a good example of like what would happen if the mortgage-backed security industry worked this way. So everyone who gets a mortgage would have a smart contract. That smart contract would be consistently appended with information about their credit score, how many loans they have, what they own, what they don't own, basically what's going on with their part of the basket of mortgages. And then this large collection of smart contracts would get basketed into a bigger contract. But anybody who wanted to look into the underlying asset and its status could look deeply into what is happening with the underlying resource. Yeah? So that's what's happening. And if that existed, by the way, the 2008 financial crisis probably wouldn't have happened, because the people that were able to access that information through their kind of diligence and ingenuity were able to avoid making the same mistakes as other people, right? So basically, the first thing that's happening is this unified golden record. The second thing that's happening, which is also a very big shift, which is not something new for blockchain people, but is something very new for the traditional world, is the asset transfer layer and the payments layer are once again two very separate worlds. Super duper separate places. Let me transfer you some assets. Let me pay you in a form of payment. Very separate worlds. And then everybody in banks, they kind of reconcile all that and make sure that like I got the money and you got the asset, and we all figured all that out, right? Well, great news. That's merging into one thing too, right? So all of that is merging into one thing now, where the asset transfer and the payments transfer is in one place. And that place is multiple chains that need to be connected. And the connection between those chains is what we facilitate through CCIP, this global open source standard for connectivity across chains. And that it actually turns out that when you want to do transactions between regulated institutions, you need a lot of data. For example, to transfer any form of payment, you need identity data to comply with AML, KYC, and something called travel rules. If you want to transfer an asset, or actually if you even want an asset to work, you need to do daily mark-to-market operations through something called NAV. So you need data in that form, just in the contract, just for it to come into existence. So if we've been able to put over 12 billion data points on chain for DeFi, enabling over $10.5 trillion worth of transactions, then the amount of data that the regulated world needs is way bigger. It's multiples bigger, even for a basic transaction. So that's basically what we're doing in all this. We're enabling people to generate these unified golden records, which are an ownership receipt with various critical pieces of data. Then we're enabling the transmission of the ownership receipt across multiple chains in a set of steps that basically need to happen for a transaction to happen. And then we're injecting various pieces of data into those transactions, like identity data, various pieces of data, they need to happen. And right now that's resulting in two separate worlds. That's resulting in the Web3 DeFi world, which is its own world, which is still growing. And it's resulting in the private chain capital markets world, where there's a lot of value kind of starting to flow into that blockchain format. And we are becoming the standard for both of those worlds, for data transmission and for connectivity. And then our fundamental goal is, as the legal clarity between how those worlds can interact becomes clearer with the help of, good, thoughtful regulators, then those two worlds will merge on a single set of data transmission and connectivity standards, the Chainlink kind of set of standards, the open source way to transmit data into and out of chains, the open source way to transmit data and value between chains, forming, once again, the Internet of Contracts, right? So that's kind of how I see this evolving.
No, that's super interesting. I think the whole point about interoperability, I think, is when it comes to navigating the kind of traditional finance and the Web3 community, it's so much bigger than just this technology kind of interoperability, right? There's a cultural interoperability, there's a commercial business model interoperability issue in terms of often people just don't quite understand each other, and we've got to try and bring people aligned. It's also just regulatory interoperability, which is getting solved, but it's still, we still got a long way to go. But I think it has to work because, as you say, everything is being built in different places at the moment, and it will just not work until it comes together. I mean, big example for Hong Kong, right? The HKMA is talking about CBDC and having a tokenized Hong Kong dollar payment. That's not going to be built on public blockchains, guys. It's going to be built on a government-run blockchain, and it probably should be for that use case. But in order for it to be used in this new economy and as a means of payment, you've got to connect it, right? And I think that is, things like CCIP and what you're doing there are going to be absolutely critical for ensuring that, that government utility and the stablecoin community, and so that can be used as payment facilitation for all these assets. So I think what we've seen, moving a little bit along, I mean, certainly one of the big questions I always get asked by people that are not necessarily kind of as close in this industry and don't spend as much time in the industry is, it's like, when is it going to happen? Because people hear a lot about it's going to be faster, it's going to be...
Tuesday.
Thursday. I will go back in the office tomorrow and say something. But when's it going to happen, and what's going to be the trigger that actually makes, when we start to get to that tipping point? Because I think we're still rolling the rock uphill, and when's the rock going to start rolling downhill and start to get bigger?
Yeah, these things are super unpredictable, which is why I work on infrastructure, because I don't need to have the specific answer to this if the infrastructure enables enough things. Yeah. I think I can. So I don't know the answer to the question. Tuesday was a joke. It's not actually Tuesday. So I think I can talk about the factors that need to come together for that to happen. So right now there's a big boom in asset tokenization, and that boom in asset tokenization is generating basically sell-side inventory, right? It's generating inventory. In all markets, you need sell-side, buy-side, right? So the sell-side inventory, the technology has gotten to a good point due to Ethereum's good work and other people's good work in open source. Tokenization is possible, great. Real-world asset tokenization by combining tokenization and oracles is possible, great. Like more inventory. Not inventory of the quality of let me make a token and say it's, a cat coin or a dog coin, or it's just some coin I made up. It's like real inventory related to real things, like financial product type inventory, right? So that inventory is appearing from fintechs, from banks, from Web3 DeFi startups that's of higher and higher quality, right? Gold coins, carbon credits, tokenized real estate, tokenized private equity, all those things. So great, you have some kind of sell-side dynamic. The buy-side dynamic is currently a little bit held up by a regulated, risk-free stablecoin that banks and larger, more regulated institutions can use to engage in DVP transactions for primary issuance, right? So for direct primary issuance, how do I execute payment? How do I execute payment as a bank? Oh man, I have all these requirements for how I execute payment. I can't find something that does that to the degree that I'm totally happy with. Maybe that'll get built. Maybe CBDCs will solve that. Maybe it's a mix of different payment methods. There's a lot of people doing a lot of good work there. They're building better stable coins that, have less risk. They're building CBDC. They're building a whole bunch of basically payment cash leg things. Okay, great. So now I'm closer to what I need for DVP. I have the sell side assets. There's more and more of them. They're better and better. I have the payments side that's getting slowly better and better. There's still some work to be done there. That's catching up. Now I need to connect, right? I need to get the asset exchanged for a form of payment. So the connectivity problem across chains, that's the problem we're working on at both the Web3 public chain level and the private bank chain level, eventually connecting them. So great, I have an asset on the sell side, I have a form of payment on the buy side, I have a way to connect, I have a way to transmit settlement price, I have a way to inject identity data to make the stablecoin compliant for a transaction. We also do that. Now, let's say that's where we are, right? We have all those things. Okay, great. We have all those things. We're now stuck in primary issuance land. Primary issuance land is the land of, I make a primary issuance to you, and you hold it, and you don't resell it. And that's not very exciting for banks. Banks don't make money from primary issuances. They're not like, let me do primary issuances all day. I sell it to one person, and they hold it forever, and that's it. I did my job. They don't make money from that. That's not a good business for them. A good business for banks, which are the people who, by the way, are very good at packaging assets, which is basically what real world assets is a secondary market, right? So the final piece to this thing is robust secondary markets for real world assets. In order to get that, you need assets. You need the buy side interested in to have a form of payment. You need everybody connected. You need a bunch of data to make the transactions compliant. And you need the emergence of secondary markets. Once secondary markets emerge and are a place where banks and other RWA issuers can pump more inventory into, then we're off to the races. That is the thing that I'm basically waiting for. I'm not sure that's going to happen this year. There's a number of fintechs, there's a number of crypto startups that are generating secondary markets for real world assets. The real world assets are getting better. We're helping people make them better by adding more data. We're helping people get to a compliant place to transact in forms of payment, to transact in the asset itself. We're kind of helping people build those transactions with all this data, with all this connectivity. That's great. But I still don't see secondary markets that are very big or that even exist. So I think this is the year of a lot of primary issuances, a lot of people generating more assets, the payments leg, the cash leg of the transaction getting more developed, and people starting to try to form those secondary markets. Once a booming secondary market forms for tokenized carbon credits, tokenized real estate, tokenized whatever, that's going to be a very big deal. And that's going to move pretty quickly. And then the big question is going to be, how does that tokenized market for tokenized private equity, tokenized carbon credits, tokenized real estate? So I don't know what it's going to be. Once again, I don't know about you, but for me, great news. I don't need to know because I just make the infrastructure. I help make the infrastructure that powers the thing, right? So that whether it's real estate or sticks and shovels, right? Sticks. Well, actually, picks and shovels. Picks and shovels. We make picks. Maybe other people make sticks. We make picks. Other people like digging with the stick, and we make the pick. That's right. That's probably the right way to think about it. So basically, that's what I'm kind of figuring out at this point. So I'm here this week. Last week I was in Singapore. The week that before that I was in Sydney. The week before that I was in London. In each of these places, I'm trying to meet with the central bank, the country's exchange, the top banks, get clarity on what would be necessary for all of those transactions across all of those chains and all of those counterparties to happen, and how can we get to secondary markets. That is what everyone needs to get to. That is what all the people in Hong Kong should be looking to get to, robust secondary markets that people can issue large amounts of assets into, and ideally that other people can buy and gain access to through a cross-chain connection to their chain in Sydney, to their chain in Dubai, to their chain in Singapore, right? So the thing that's going to speed up and juice the secondary markets big time is a level of global connectivity, global liquidity flowing into those same real-world asset markets the way it flows globally into DeFi. So that's that's going to be one of the key hurdles to, I have a secondary market and I have all these people in Hong Kong, but how do I get someone in Dubai to connect to the secondary market and send their stable coin? that's going to be the next issue after the secondary markets, which we are very actively working on.
That's where that point on regulatory interoperability is really going to come in,
Yeah.
because that's not a unique to blockchain thing. That's a problem that we've had for many, many years in financial markets and so on. But I think what you said there about your travels, though, Sergey, brings us on to a good segue now, because we are in Hong Kong. We're a Hong Kong association. We all want to know, what are your thoughts so far of Hong Kong, and how have those conversations you've been having in Hong Kong, with those regulators, with those financial institutions here, how do they differ from the conversation you're having elsewhere? And what are your overall impressions of the situation here?
It's very, very positive, because it's a very interesting kind of dichotomy to some of the other things I've seen where, well, like opposite situation to other things I've seen. So the HKMA, I see them sometimes even pushing people to get to a place where they're going to do transactions and trying to enable them to do transactions. So I think that the goal of the Hong Kong regulators, from what I can tell, is consistently to make Hong Kong a global hub. Hong Kong is, in the eyes of the people who try to make it the place that it is, a global hub for shipping, a global hub for finance. Ideally, in their eyes, it would also be a global hub for digital assets, and they are taking steps in that direction, active, real steps. Not like we hope one day, but like actual clarity. People are able to do transactions because this clarity exists more and more. It's a very positive thing. Our interactions with them have been very positive. They're very thoughtful people. They want to create clarity so that more transactions can happen, which is fundamentally the goal that I have in helping build Chainlink and helping create this global connectivity standard. And fundamentally, I think that's the goal that everyone in the blockchain industry has, because see, there's just kind of like a latent outcome from this, right? It's like all the private bank chains put a few $100 trillion on chain across all of them. Well, there's a percentage of that that's going to connect to the public chains. A certain percentage of that is going to flow into DeFi. So it's actually really funny because like 2 or 3 months before the Bitcoin ETF, if you asked the average person in the public chain world, how do you like BlackRock? They would have been like, no, BlackRock, that's the band. I'm not into that. A month after BlackRock launches the Bitcoin ETF, and the Bitcoin ETF helps the Bitcoin price go up. BlackRock, what a fantastic group of people. They're just the most beautiful people I've ever heard of. Have you heard of them? Let me tell you about them, right? It's like, that's just going to happen a million times more when people understand how much money we're talking about flowing into DeFi and public chains and regulated DeFi and all this stuff. So I think Hong Kong is positioning itself, very positively with the clarity it's created, with how welcoming it is to Web3. Literally this week, there was the Web3 festival, which I was a part of. And from the point of view of our conference, we're actually having our conference here this year in Hong Kong in October as part of FinTech Week towards the end of the...
And also week. Part of the Blocktober series, which Web3 Harbour has been very heavily involved with trying to promote. So,
Yeah, so my general impression, it's been very positive. I think that the fundamental goal of the folks that I've spoken in these groups with is how can Hong Kong be a global hub for digital assets? And I think there's also a kind of dynamic where they want to do that more than others. The other two possibilities for this, frankly, are Singapore and Dubai. But realistically, what I think will happen is they'll both do a lot of great things, and then all the assets and all the payments and all the innovation they do in each place will get connected. And that's what I'm kind of trying to do, is how does all the great output of the assets, all the innovation in all three of those places get connected so that transactions can happen in a reliable, compliant way at very large volumes, right? Like we have users that are working with us on implementing CCIPs. They've already announced publicly, so I can mention it, ANZ Bank. This one user, this one bank has $1 trillion in assets under management. That is one user on this system, one, with $1 trillion in assets under management. And the amount of these users out there is much larger than people think. So I think Hong Kong's doing a great job. And it's going to be one of those places where this industry, I think, really takes off.
Yeah. And I guess, we also talk about like, where does Hong Kong kind of fit together? And I think partly because we do have that deep traditional capital markets, we've also got a super enthusiastic Web3 community and so on. And I think
that's true.
People always talk about, kind of Asia, Europe, Americas, US, when it comes to the so the crypto markets, the Web3 markets are moving away from maybe TradFi now, but how do you sort of see someone from, you spend a lot of time on a plane, but, hails from the US, but where did Chainlink see most activity in those regions, and how does that activity kind of differ? And what should we learn from that from us being in Hong Kong?
I think it kind of shifted from some of a lot of the top protocols being in Western countries to some of the top protocols actually being in the Asia region over the last, I would say, year and a half, something like that. I think part of that is due to the uncertainty on regulation in some parts of the Western world and the greater certainty in Asia. And also, I think there's a very fundamental economic factor that cannot be ignored, which is the sheer market size in Asia. The emergence of middle class, all the value in China, all those types of factors are very seriously impacting this region's kind of attractiveness to our industry. In addition to the fact that there's regulatory frameworks to make, in Hong Kong, it's called a VASP, Virtual Asset Service Provider. In other places, it has other names. But there's like, hey, you can register a business, you can launch RWAs. It is something that is normal and safe, and we want to get you to the point where a bank can transact with you as a VASP, as an RWA creator in this reliable, regulated form, right? That is not something you find in all parts of the world. And then on top of that, you have all this value in Asia, right? You have a lot of value between China, emerging middle class in various places. So there's a kind of retail side of the value, and there's an institutional growth in the value. It's basically a question of market size at that point. So if there's regulatory clarity, if all the technical systems come into place in a way that allows value to flow into the blockchain format, whether it's in the payment format or in the asset format, that is kind of the trajectory this whole area, this whole region is on. And then if you put that together with secondary markets, that all of that value can flow in, then you really have something. And then if those secondary markets become globally connected, if those secondary markets now can tap and kind of connect with external global liquidity from places like Dubai, Singapore, all over the world, then you really, really have something. And I think so I think I just see more teams because of that clarity and because of the market, the size of the market. That's not to be ignored. Yeah. That's a place in which Hong Kong has a definite advantage as well, in terms of the total amount of billionaires, the total amount of millionaires, the total amount of capital that is managed in Hong Kong. It is, I think, clearly the largest place in Asia as a financial hub that manages that amount of capital. So the market size in these kind of situations can't be ignored.
No, fantastic. And you mentioned SmartCon, and maybe you've already answered the question, but we're very excited that it's coming to Hong Kong. But so, what factored into that decision, and what have you got planned?
Frankly, it was the collaboration with the local authorities. They've been very supportive. We got help finding a venue. We got help in various ways. They were extremely positive on it and collaborated, quite a bit with our team. There was a lot of encouragement to have it here, a lot of various forms of support that we really appreciated. And so I'm really thrilled to have it here. You're right, there's a big and growing Web3 community here, and there's a big capital markets community. And the capital markets community is eager to do transactions with each other. And some of them are even interested in doing transactions with DeFi protocols and things in the more kind of public blockchain world. So all of those factors together were kind of a very positive signal. But to even to the point that you folks have this, event here, right? You have all these sponsors. There's all these people that came. There are people that are interested in this here. They're supported by the government, and there's both active Web3 community and there's an active capital markets community. I think those communities don't fully understand each other yet. But once they understand how they can transact among each other, they will understand each other very quickly.
Yeah, and I know the audience on the podcast can't see this, but actually, I think just looking around this room, we probably have got, I'd say, equal between that Web3 community, that capital markets community in here. So we'll do a round of hands later and just see, but I think you actually will find that is really the case, and just bringing those two communities together is critical. So. And it's just one final question for you, Sergey, before we wrap up is, I think SmartCon coming in and having these sort of developer conferences come to Hong Kong it's quite a new thing for Hong Kong. We've not traditionally had those kind of conferences coming in. I know there's a lot of kind of hackathons that go around SmartCon and things like that. So with all the things you've spoken about now, and with all the new financial rails that we're saying need to be built, what would be your advice to people in Hong Kong at the moment, or people internationally that are thinking of coming to SmartCon for that period of time, and to bring ideas as to what should they be building between now and then, or thinking about building, that is going to really make a difference to this new financial world? And what do we need most?
I think right now the Web3 world and the TradFi world is still pretty separate. So building things that connect them without the sufficient regulatory clarity for how they would connect legally is going to be a tall order. We're in the process of building that, and we're in conversations with the folks that would set those policies and that would create clarity so that our system can enable transactions to happen in a compliant way. But it's still pretty complex, and even with hundreds of people working on this with us, it's still pretty complex, right? So if you're starting to build something, my advice would be to focus on a use case, and in that sense, you should choose whether you're in the Web3 world or whether you're in the TradFi world, and then you should focus on the unique advantage that you have. I think real-world assets will be a big deal. I think enabling secondary markets for real-world assets will be a big deal. I think that good payment options, especially payment options that can be compliant, will be needed. That's a place where maybe the TradFi side there's a product there of some kind. I think if you have limited resources and you're trying to build something in the public chain world, it's basically DeFi, real-world assets, or GameFi, which is gaming matched with a certain level of different ownership rights and financial incentives. And then if you're interested in TradFi, I think the payments leg has a lot of stuff that can be improved on and is getting worked on. Though there are already, good companies like Circle and others already building solutions there. But I think it's very important to have focus, especially early on when you're building something. Yeah, that's what I would say.
Oh, perfect. Thank you very much. And thank you very much for this conversation, Sergey. It's been absolutely fascinating, and really glad to have you in Hong Kong, and looking forward to having you back in October for SmartCon.